So next we have Krish Venkat. He's an entrepreneur, a CA and psychologist focusing on the psychology of leadership, entrepreneurship and money. His mission, enabling the creation of 1 million millionaires and 1 million leaders in his lifetime. He coaches CEOs and entrepreneurs in business, strategy and money. And we also have Mr. Gowrishankar, Associate Director, HDFC Private Banking Group. He has 11 years of experience in the field of investment and personal finance. He currently manages a portfolio AUM of over 500 crores. So today, Krish and Gauri, they'll be talking on investment intelligence for women, tame the monkey and manage the money.
A very good evening to all of you. My friend once told me, you know, Krish, I've given all the freedom to my wife. So then I asked him one question. So when did you own it so that you could give it to your wife? So then I was thinking, I think that is one thing which we all need to think about now going to the next level. I'm sure at least the men here, we don't need a separate Women's Day because we believe that every day is a Women's Day and we empower, women around us. And in fact, I'm here because my mother invested her time and energy on me many years back. And that's one reason why. So that is one evidence that is sufficient to say that women are part of the mainstream, and behind every man's success there is a woman, but behind every woman's success is there a man? That could be a question. So this topic is very interesting, taming the monkey and managing the money. That's one way of making it attractive. I'm sure many people will be wanting to watch it. So how do I tame the monkey, and what is that monkey about? There is at least some myths surrounding money, and definitely one such myth is that money is the root cause of all the evil. That's definitely one myth, especially in India. And I'm from a very normal middle class family, and now, I've risen up. And I've listened to many such stories about money, and I know that most people here believe that money is the root cause of all the evil. There are three situations you could visualize when you talk about money. Too much money, too little money, and just enough money. So all the three are supposed to be problems. So too much of money, they say, oh, okay, money has gone into his mind and is behaving in a very eccentric manner. Too little money, yes, again it leads to terrorism, a lot of social evils. And just enough money, again, a lot of fights at home. Then, I suppose money cannot be the evil there. Because at every situation you say money is a problem. So then what is the root cause of the problem? So it's not money, but it's about the mind. So it's like saying the knife is the root cause of all the crimes that are happening in the city. It's not the knife that is to be blamed, because the same knife is used by the doctor to save a life. Right? So what do we do? One thing is to master the mind, become a mastermind, so that money becomes a servant. And money, when it's a servant, is the best thing to happen to a person. You master the mind, you become a mastermind, and money becomes a very good servant. You don't master your mind rules you, and then money becomes your master, and everything can go wrong. I think that is one thing which we all need to remember. And how do we become a mastermind? One thing is to have an overall objective in life which gives us a meaning in life. One, find out what are the challenges around us. What are the various problems that are faced by people around? And start finding solutions, start serving people around. And thereby you earn money, money becomes meaningful. And that way, you master the mind. And then, money becomes a good servant, and irrespective of how much money you earn, you are still the master of the money. And the best example, you have a person here who has founded all this, and then he has used, his resources, the abundance, in the right way that gives a satisfaction at the end of the day. And the best thing to do to sleep well is to serve people around, find a solution, maybe involving technology, maybe it's not involving technology, and then when you sleep well, you can be very satisfied that, okay, I've done something to the world around. And once you have, now you need to become a mastermind through a larger objective, one another thing which will make you master your mind and the money is to have a clear set of values. The moment I say values, people could think that values are for Gandhians, values are for old people, or maybe you can write it on the company's report so that you could advertise about your company. Values can be simply classified into two types of values. One, what you want to achieve in life. All those things you want to achieve in life could be one set of values. All those things you need to demonstrate to achieve the first set of objectives, they are the second type of values. I think now you will realize that values are very powerful and they're very relevant for each one of us. So all that we need to achieve and all that we need to do to achieve the first set of the goals, I think they are values. But we tend to, kind of mystify values and we complicate them, and hence, we are scared of values even. So once you have a clear set of values, you will be able to take very clear decisions. And one of those decisions are your decisions about money. What do I do with my money? Okay. So this would help you to be a mastermind. So once you become a mastermind, now it's about managing your money. So how do I manage my money? So what do I do to manage my money? Now I'm going to use a very simple demonstration. I'm going to use the analogy of a hand fan. Okay. So one way of using the hand fan is to hold it like this, and then I'm going to shake my face this way. So what happens? This is happening to most people in the IT industry, where you earn a lot of money, you work, the money doesn't work. I'm sure Gowrishankar will have a lot of examples to share where people have money. I have some of my friends and relatives, very close relatives, so I know the inside information about them. They have huge amounts of money and they have not invested their money properly. So the money doesn't work. They keep working harder and harder, but their money doesn't work. So that is situation number one. And the second situation is, okay, I use a hand fan in the normal way. And the third is, I remember that it's the age of technology, so I need to automate. I don't need to use a hand fan. The age of inverters and all, the same thing applies to money. There has to be a situation where my money keeps working automatically, even as I sleep. And definitely you need to use the proper help of advisors. There are a couple of advisors here in this place. So and I'm not doing any marketing, so you can find your own advisors whom you can trust. I would say that once you find your right advisor, take your time, develop the trust, and once you trust, once you start listening to them, they're going to tell you how your money can work. As you keep working hard on one side, you're also making your money work on the other side. Now, is there a simple formula for somebody to manage money? And after I simplify it, of course, Gowrishankar will throw more light on an expert way of managing the money. Where do I invest and all that? Now, one simple way is to imagine 3 or 4 jars, where you put your money. I'm also going to use the analogy of a cow, a lion, a duck, and a grasshopper. Now, one part of your money will be budgeted to feed the cow. So what does a cow represent? It represents your monthly expenses. It's so simple. So what is the big deal, Krish, you might ask? In many households, you don't have a proper discipline even in budgeting the right amount for the household. First, most people may not know how much is being spent, and two, you may not know what's the right amount to be budgeted. That is the money part, the quantity part. And the quality part is, am I spending enough money for the right nutrition? For example, if it is food, am I budgeting enough money for the nutrition of the family? So it's a combination of quality and quantity when you budget for feeding the cow, which is just your monthly expenses. And now about feeding the lion. One needs to definitely allocate a percentage of your income on feeding the lion. The lion represents personal leadership. Unless I'm going to invest on myself and the family around me, unless I'm going to invest on the personal development, the future is not going to be the same. What works for me today need not work after, say, 3 years, after 5 years. So it needs a specific investment without even depending on my organization. So maybe I can spend it on buying books. Maybe I can attend training programs. I can attend speeches. Maybe I can even travel abroad to upgrade my skills. And this is something very important because, this will help you to increase your buying capacity. There's a very big difference between buying and buying capacity. Today if I want to buy, I can buy anything without even having the buying capacity because there are enough banks. There's some bankers even here, who would, these banks, they do their job by marketing. Okay, you want to buy the latest BMW car, we give you the loan. So we are here, that's that kind of a thing. But that is just buying. But buying capacity is I invest on myself and I keep improving my buying capacity so that I can buy that BMW even without the help of the bank. And I keep on increasing my earning capacity. So investing for feeding the lion is something very important for each household. And I'm sure most households do not actually have a structured kind of a budgeting for this. And this applies to the whole family. Now I'm going to talk about feeding the duck. And this duck is an ordinary duck, but it lays golden eggs. So we all have heard of that story, the duck which lays the golden eggs. I would strongly recommend that 1% of your earnings must get into this jar. That is for feeding the duck. And once the money gets into that, it should never come out. Nothing should tempt you to work. So we are all taught to keep working like the ant, and that could precisely be the problem. So I think one amount needs to be invested in the grasshopper in us, which wants to celebrate, which wants to enjoy life. I would say there are many Indians, I don't want to use most or always or almost always. There are at least many Indians who do not know how to celebrate life, who are very reluctant to spend the money on enjoying life and celebrate. I think 1% must go to feed the grasshopper, where you really celebrate life in your own way. And that ensures that you are in good spirit when you are ready to go to that office on a Monday morning. So this is about feeding the cow, which is your monthly expense, ensure quality and quantity, ensure proper structure, and then feeding the lion, personal development. What works today may not work 5 years hence, and keep on developing yourself and your family. And feed the duck and take care of the duck because it's a golden duck. And of course celebrate life by feeding the grasshopper and keep celebrating life. And for me, celebration is, one form of celebration is to be in such forums, meet people, have fun, and likewise you need to find your own ways of celebrating life. So I wish you all abundance and a life filled with celebration. And now it's on to Gowrishankar.
Good evening, ladies and gentlemen. I thank the knowledge community team and Sukumar sir and Priyaraju ma'am for giving me an opportunity to address this intellectual gathering. First presentation was very, very inspiring, ma'am. Thanks a lot. And I'm sure we all men here will take the responsibility of taking care of our own family as such. It's really inspiring, and definitely we'd like to stay in touch, and we'll be supporting you for the cause as such. And it's very, very critical, in fact. And thanks, Krish. In fact, I pulled out Krish because he's a psychologist and also a very good friend of mine who inspired many people, including me, and also his concept of building multi-millionaires. When I met 6 years before, he was sharing the idea of inspiring millionaires, because in India there is a lot of opportunity for us to scale up multi-millionaires, but unfortunately they lack the guidance and supports, because most of the corporate trainers focus only on corporate. They don't focus on SMEs, but Krish is out of the blue, one of a good heart person who helps for the SMEs also, in spite of his busy schedule in the corporate world. Thanks, Krish. Coming back to the topic of investment intelligence, when Kavita gave the topic on, she said that we need women's flavor for the Women's Day special. So the thought which came first is investment intelligence for women. The first thought which came to my mind was who was the first person who identified investment intelligence for women? Was Lord Vishnu, because he is the person who identified that woman has the intelligence of managing money, and he handed over the financial aspect of financial management to Mahalakshmi. But today, if you ask me, should I give my credit card to my wife? I really doubt. How many men will do that? We are scared of it because we perceive that women are spendthrifters. So it's very paradigm shift from a historical time to here. But still, I have a different opinion that women are a good investor, and they are still an intelligent investor. But unfortunately, as Madam was mentioning, very few are taking that risk of getting into that level. My idea was of not only about various investment options, what I will be discussing today. Finally, I will also conclude in a way that what are the investment avenues and how one can be a better intelligent investor in the space of investments. That also I will try to cover up. Coming back to the topic of investment avenues, I just want to go back to a little bit about the history. A few centuries back, we used to have gold coins, silver coins, all these things, and that will be the major commodities for us to use it on a day-to-day basis. When there is a surplus, what they will used to do? They dig it and put a pot, save it. That is the safe locker. After a few years after our independence, bank came into the picture. Currency notes was a major commodity. Then people thought that, okay, bank is a medium for me to keep safe notes. So they started putting the money into the bank. But it took a lot of years to get adjusted with the banking system, in fact. So what happened? Slowly they started yielding their investment returns from the banking. That is the savings interest, which is very minimal today, was the first step for them to take into the investment side. Slowly after that, they started investing into fixed deposits, where they started enjoying the higher interest. So slowly the mindset moved to a next level of investments as such. Of course, gold, I don't have to mention about it, which was part of investments for women always. That was there, in fact. After that, it was only the real estate, which was anyway for our own need base. We started investing into real estate. These are more of a traditional investments which existed for quite long. I would like to categorically classify asset class into two. One is a traditional asset class, and second one is emerging asset class. Traditional asset classes or the one which I was mentioning about gold, real estate, and the FDs, fixed deposits. All those investments are the traditional asset class, which we are very, very familiar with. What happened post after that is, in 1980, when the Indian stock market started the operation, that's when the real opportunity for investments came for the investors. They were able to buy a business as such. In what form? In form of an equity. So if I need to buy a business of, even though if I don't understand a petroleum company, I can own a company's shares by buying an investment into that. That's how the investment market started, in fact, in 1980s. Slowly what happened is 1994, that's when the mutual fund houses started their operation, which gave an investment avenues for all the investors who are in a layman too easy to understand and also to invest in a smaller ways. So that's when in 1994 the mutual fund houses came into the picture, because all your small parts of money can be given to the fund manager who knows about the subject, will be investing on your behalf, and he will share the profit to you all. So that was the easier way. In 2005, the next level of leap of investment was private equity investments, which is nothing but a company which is held closely by a promoter, which is in an unlisted company. That means it's not listed in the exchange. You can still own a company by investing into a private equities. That's an advanced stage of equity investment as such. So these are the emerging asset class which came into the picture. One second. As I was mentioning, so the three asset class have been that gold, real estate and fixed deposits. The problem what happened is we agreed as such. Of course, we needed higher return because our expenses always shooten up. So what happened? We want to look at better return than this. So to outclass this, because of inflation and also the economic growth, we started looking for emerging asset class. That's what I was mentioning about the stock market, then the mutual funds and the private equity funds. All this post after 1980 was a great opportunity for them to prove themselves as an asset class as such. Okay. Why I said that women are a great intelligent investor is, one, when they invest in gold, I'm sure many people know about if a baby girl is born in a family, first thing what they do is buy a gold. And they have a fairly long-term planning for till their marriage. They will have this much amount of money we record and this much amount of gold we have to mobilize in over a period of time. That's what they plan it accordingly. They will start cost averaging. That means they will keep accumulating over a period of time. And they will never buy and it's a clear long-term strategy. They will buy and hold. They will not sell and trade off. That's a great investment strategy. Buy and hold. And whenever there is a surplus, they immediately will go and buy some part of a jewelry or a gold, and they will come back. And then whenever there is a price fall, they will immediately will go and buy it back. And sell only when there is a need arises. All these qualities are qualities of being a long-term investors. For equity investors, all these are the characteristic of an equity investors. So women are intelligent investor, unlike men, because we try to trade off with the opportunities. But unfortunately, they are not trying to explore the other avenues of investment. That means they are not taking to risk, as ma'am was mentioning, they are not taking the additional risk to explore the emerging asset class. Why? Because they don't want to know the subject. They're very comfortable with the physical assets what they hold. They are not they're very uncomfortable with the which is invincible asset class as such. So that's prime reason they didn't explore the opportunities. But what is the opportunity miss? We'll get into the figure because I have not spoke about any figures till now. Being in the finance field, it's very critical. Okay, can anybody guess? In 1980, somebody have invested in FD for 1 lakh. Can anybody guess what will be the sum of money today?
That's about, it doubles every 10 years. That's 2 plus 2, 4 plus 4, 8, around 8 or 9 lakhs.
Any guesses? Other than this? 16 lakhs. He was very close. Only thing is he didn't include the compounding. The compounding magic works only in investments. Okay, so how many times? 16 times. Can anybody guess what is the return of gold? Especially I would like to, because you've been fond of gold. How many times? Any guesses? 10x. From a month. Anything? How much? That's true. Yeah. 25 lakhs, which is 25 times of return in the last 34 years. Any guesses on the stock market? Any guesses? Any guesses?
50.
Huh? 50? It's closer.
It's hard because it increases plus the dividend yields and all this.
No, I'm taking only the pure maths without dividend yields and other thing. It's simple. Any guesses? 50, it's closer. It's 220 times. That means a lakh of rupee is worth of 2.2 crores. As Krish was rightly mentioning, what we have been doing is we are holding the fan and we are just rotating our head. So if somebody would have stayed put in their investments, instead of gold, if they would have stayed invested in equities, they could have planned their retirement well. Answering, yeah, I have. Numbers for real estate will be very difficult because, and second thing, it is always lesser than it will be lesser than even gold because it doesn't carries the compounding. Coming to the point on it doesn't. It only carries the absolute return, so it will be always lesser than gold also. So myth breakers. When coming to the point, Kumuda, he was mentioning about. The women were not in the top post on. There are enough women who are in this top post, who are in the financial field, and India has the maximum number of women CEOs in bank, in financial institution. Pardon me?
She herself is in a top.
Yeah, that's what I'm saying. In the financial field, I'm saying. To name a few, all these people have explored the opportunity of emerging asset class. And they have shown that they are an intelligent investors, and by the way, they are leading the financial institutes today's world as such. To name a few, Arundhati Bhattacharya is the first lady chairwoman of SBI. After 207 years, I think really she need a grand applause. And Chanda Kochar, everybody knows, Shikha Sharma, to name a few, and Kalpana Mofia. All these people have been leading bankers from SBI, ICICI Bank, Axis. So I would like to conclude that women are great, intelligent investors. Unfortunately, they are not exploring the emerging asset class. If they try to explore the emerging asset class, definitely they can yield a higher return rather than getting into the traditional investment side, because those are the days which is over. Now, if you need to beat the inflation return, you have to stay invested in a long-term investments. That's the only way to beat the inflation and also stay invested with your lifestyle and other expenses. So what you need is, as Krish was rightly mentioned, we need to spend a lot of time in the financial planning as such. You should have a set of goal for your own self, and work on those as a backward method. Closely work with your advisor and understand and be prepared for all the calamities as such. And customize asset allocation. Don't follow what your neighbor have done in your portfolio. It will not suit for you. It's just like a medicine, in fact. So just don't buy what they have bought, what your neighbor has bought. Try to have your own strategies, because the investment portfolio has to be customized and it has to be reviewed at a periodic intervals. And of course, like gold, just periodically invest on a regular interval. So that is the only way to achieve your goal. You have to periodically invest. Don't look onto the markets on a regular basis. Instead of that, allow the money to stay invested in for a market for a longer time. That is the only way to achieve a goal. So don't keep shuffling the portfolio. That will never yield you any greater return. Of course, I was mentioning about the buying and hold strategy, and timing is a great philosophy to stayed invested in equities, in fact. and be fearful when market is greed, and be greedy when market is fearful. This only can yield a return. If when the entire market is talking about the market is looking gloom, political elections, these are not the time to enter into the market. I think those are the time where you can make a greater return than the other scenarios. So you have to be foolish before others and be isolated from the crowd. Then only you can make return. And the last one is buy and sell only when there is a need. Just your neighbor bought, you don't buy it. That may not be the right choice, in fact. So with this, I would like to conclude that I request all the women to, not only women, even the men also, to explore the emerging investment option and like to bring a sustainable, we need a greater goddess Lakshmi to support us. And thank you all. Thanks a lot. Any questions I can, yeah.
When you're investing in gold, the price is same for all the people. It's a common factor. So you can calculate the return on investment. Similarly, your fixed deposit based on fixed interest, whatever. But how did you calculate the multiplication factor in the case of equity? Because most of the time it depends on what you invest in. Like there are companies that go bust, and there are companies give you 1,000 times yield.
Okay.
How did you calculate
that?
Yeah,
it's a very good question. I have taken a very simple thing. I have not taken into a diversified funds or anything which is of stocks or anything. I have taken only the BSE Sensex only, which was started in 1980 at 100. Today the index level is at 22,000. It's simple maths on. I have not taken into consideration of dividend yield or anything. If I'm taking into dividend yield, like rightly Sir was mentioning about it, it would have been a higher figure. Without that, with the base math itself, it is 220 times. If including dividend yield and other thing, it will be higher frame. If I consider equity diversified funds, it will be still higher. It will be at least 300 times.
I think Gauri, that's a great speech. The thing is, there's a risk. Maybe you want to explain what is the risk associated with it. Gold is risk-free generally, typically.
I consider gold as a higher risk than any other asset class. I'm sure many women will not like this, but still, at any given point of time, it is higher risk than any other, because it's an unproductive asset. What you can gain out of gold, there is no production happening or anything. So it's an unproductive asset. What we are betting on is the demand, right? So to me, it's a higher risk than any other. I consider gold as an alternative currency. I don't consider gold as an asset class, but whereas a traditional way, we have to call it as. That's why in a normal portfolio, we will not allocate more than 5% into gold. The primary reason is we consider this as an alternative currency. When in case of any volatility in the global scenario, you can use that as a buffer. So that's my view on the gold as such. When coming back to Sukma's question on risk, yes, there is a risk involved. How to counter the risk? It's very simple. If tomorrow, if gold price falls by 1,000 rupees, how many people will go and buy gold? Everybody will go and buy. If tomorrow index falls by 10,000 points, how many people will go and buy stocks? Very few. Because it needs guts to buy at that time. That's what I said, that you need to be foolish sometime to make a real return. That is one point. And second is, how to counteract those risks. There is a study, in fact, there is a stats behind it. If somebody invests in a period of less than a year, 7 out of time you will be losing the money. If you invest lesser than 1 year time frame. If you stay put for 3 more years, 5 out of time you will be losing the money. If you stay put for 5 more years, the probability of losing is 1 out of 10 times. But beyond 5 years, you will never make a loss in equities. There is a data behind it. I can show that also. So that is so how to counteract the risk of equities? expand the time, in fact. And second thing is, more importantly, equity means don't invest into equities stock, one independent stock, and then say that I bet on a mid-cap company. Somebody, my friend, has told me that it's a bumper. You'll make some 10 times of return, and that become a penny stock. I'm not talking about those stocks, in fact. I'm talking about a simple mutual fund investments where you have invested into a diversified mutual funds. I'm not talking about a trading script or anything. A simple equity diversified fund which is available to everybody. You can invest in that, stay put for 3 to 5 years. I can give a guarantee that you will not lose money on that.
What happens here is, 5 years back he has invested 10,000. Okay, now he is going to take back the mutual fund. It is lesser than the 10,000. Okay. So what is it? In mutual fund, we have many categories. So what is it?
Exactly. In mutual funds, there have been various investment options. And second thing is, first you have to check with your friend whether it is an insurance policy or a mutual funds.
It's a mutual fund for sure.
Okay, if it is a mutual funds, which mutual fund is what he has to look at. For example, if it is a sectorial fund, for example, if it is related to a one particular sector, infrastructures and other thing, then it is not it is only focusing on one particular sector. It's a high risk gambling as such.
So every year they actually give up 10%. So you would have got 5 years.
5%. More importantly, if he is investing into, for example, suppose let's assume that few years before, like for example in 2005, pharma was never been a favorite sector, but it was like that for almost for 5 years. What happened in the last 2 years is everybody knows that pharma is the favorite script for everybody. So if somebody invests only into pharma companies, he would not made money. He need to stay longer, in fact. But my suggestion would be always stay invested in diversified equity funds. That is the best way to counter all the account, because it will de-risk the complete portfolio. Stay invested into diversified mutual funds. Don't explore things, because there are 2,600 schemes are there. If you get into the details on, you'll really will be very difficult, in fact.
Now they are saying that it has increased a little bit.
That's because of the market movements and everything. Because market has also moved from 17,500 levels to 22,000 in the recent. So could be because of the market movement it could have risen. But what I would suggest is invest into a diversified fund rather than testing your water with other funds.
Thank you.
Yeah.
Just adding on to that, like say from my personal experience itself, like say, and from what I've seen from what my friends do, people lose a lot of money in the market when they go for trading. When they go for investment, especially as Mr. Gowrishankar said, like say if they go for especially long-term investment, they actually choose the company they want to invest in. Nowadays there is like say a lot of information that is available about each and every mutual fund, each and every say company. That's sort of easy for us to make that decision. And if we are like say willing to like say stay that course of like say at least 5-6 years, then it's a very good avenue for investing. Just keep away from trading. That's what I have seen.
It's very true, in fact. That's what I said. The buy and hold strategy only can yield a return. If you are buying a flat, you will not trade on every 6 months now and then, right? You will hold it for a long time. You will like to know the price of the property, but you will not sell it, buy and sell every now and then. The same thing applies here also. It is again an investment vehicle where it is yielding, going to increase your wealth. So you also need to give the sufficient amount of time for the same.
Just to add to what Gauri said, if you watch these martial arts movies, it's not the strongest and the fastest who will win. It's those who have tamed their mind. You watch any of those movies, you need to find your inner peace. And if you look at Warren Buffett, easily one of the best models, evergreen models for earning money in the stock market. One thing he has done apart from knowing what he's doing is to stay calm. In 2000, when the whole world was betting on so many .com companies, he asked some basic questions. He remained calm, and some people even called him a dinosaur, an extinct thing. But he remained calm. He asked some basic questions. He did not get the answer. The two basic questions were, what is your business model? What is your revenue model? So there were no answers. So he said, no, I'm not going to invest there. And everybody was making fun of him. But 2001 proved him right. So the most important quality, apart from knowing where we're investing, is it's about understanding ourselves rather than understanding others or understanding the stock market. So end of the day, it again comes down to taming the monkey mind.
Correct.
Thanks, Krish and
yeah.
Thanks, Krish and Gauri, for this insights for investors like you. I would like to understand the investment in real estate. How does it look like?
See, investment in real estate is very fragmented, and it is more of a region specific. In fact, I'll just share on one input from one of the fund managers. What he said is, Chennai market is far better when compared to the other regions. In fact, when compared to NCR, that means Gurgaon belt and other thing, Chennai market is far better. In fact, because the kind of amount of leveraging what the real estate builders are taking, it's a huge risk. In fact, so coming to real estate, if it is a need based kind of a thing, it's good enough to have an investments. Apart from that, if you have a multiple kind of properties, that is not going to help you over the long run. You may find an absolute return. That is the mistake what they do. I bought this property say about 10 years before. It is double now. That's a common statement what they make. What is the return? If you really look on the IRR of that one, it won't be much. In fact, it will be hardly 8 to 9%, which is lesser than your normal FDs. Whatever the real estate, So I'm not completely ignoring real estate as an option. Yes, real estate should be considered as an option, but it should not be the complete overall asset allocation. If you have 80% of your money into real estate, where is the liquidity? Tomorrow any crisis come, you'll be stuck, and you have to sell those property at a discounted price. Rather than, it is better for overall diversification. Have some money into equities, some money into gold, some money into fixed deposit, some money into bonds. If you spread all those things, it is a better way to counter the risk. And primarily, if I know a few individuals who have properties of 10, 12 properties on, later stage it will become a huge problem of estate planning. How you will manage all those properties? In a mutual funds, it's very simple as such. You nominate somebody and then money goes to that individual. It's better way of estate planning in a mutual funds rather than in a real estate property. You incur a lot of expenses in maintaining all those assets. So the return has to be net off against the expenses.
Thanks so much. We should thank both the speakers for the excellent insights they gave. Thanks Gauri, thanks Krish, thanks Vijay ma'am for those insights. I think I'll